Well, shares of home improvement retailer Lowe's are trading higher today following mixed earnings, with the company, though, largely beating second quarter expectations. For more, let's bring in Max Rakhlenko. He's analyst and director at TD Cowen. Thanks so much for making time for us today, Max.
Great. Thanks a lot for having me on.
So there's been some question about how well the home improvement sector would hold up. Looking at Lowe's results, what's your sort of broad takeaway?
In general, the sector has held up better than we thought it would. Home Depot beat expectations last week, and similarly, this morning, Lowe's beat as well, with same-store sales as well as margins coming in above expectations. What we're seeing is that homeowners continue to spend both on contractors, which is the pro channel, as well as on their own smaller projects. Now, where we are seeing a pullback, it's really on those big ticket discretionary items, as consumers are being more choiceful there.
Wasn't there some pullback in the DIY spend as well, the do-it-yourself category?
Yes, there was. But within DIY, the homeowners are spending on projects. It's that the discretionary piece, the big ticket items such as patio furniture, grills, things like that, homeowners are really pulling back on more and more.
Okay, so maybe painting the laundry room, but not necessarily putting some new appliances in there as well. When you're thinking about the DIY and contractor split, though, that does seem interesting that the contractor portion would be holding up more, because presumably that would be more expensive.
Yeah, so it really depends on the size of the project. What's interesting is that although the contractor, the pro segment continues to do quite well, professionals have quite extended backlog still, and project leads do look good. What we are seeing is that the homeowners are pulling back a little bit, where if previously you had a very large project, now you're either splitting it up into several smaller ones, or maybe decreasing the scope of the project. So although the pro continues to outperform the DIY segment, there has been some moderation in that channel as well.
What are you watching to get an idea of how that consumer demand is going to play out in the months to come?
So some of the key macro indicators that we really pay a lot of attention to start with the employment picture. Ultimately, that still remains quite good. So although housing turnover has significantly declined, homeowners do have a lot of equity in their homes. A lot of homes have their mortgages paid off, and overall consumers do have still elevated cash in their bank account. So in general, we think that as long as the employment framework holds up, that's going to be a big tailwind. And then furthermore, home improvement at its core is often viewed as an investment in the home. So as long as the value of your home remains, similar or continues to go up, which is what we've seen a lot of during the pandemic, people will continue to invest in their homes because they view that to be a positive ROI project.
I think you were looking out for takeaways in terms of geographic demand, particularly for that pro segment. Did you get any details on that, where things are maybe holding up better than others, or where things are weaker than others?
So maybe somewhat surprisingly, geographic demand remains pretty similar across the U.S. if we exclude sort of some of the weather challenges that we've seen both out west as well as out east earlier in the year. So excluding that, despite home price volatility across some regions that saw massive acceleration during the pandemic, in general, both Home Depot and Lowe's have seen relatively similar demand on the pro side.
If you were comparing the results of Home Depot and Lowe's, because we did get Home Depots like you mentioned already, who's performing better at this point in your eyes?
The performance has actually been relatively similar. We thought that Home Depot's performance might pull away from Lowe's, but net at the end of the second quarter, both companies are performing exceptionally well, with same-store sales in the quarter coming in above, and then both Home Depot and Lowe's did reiterate their guidance for the back half. So neither has really seen much more of a more pronounced deceleration. than sort of what was expected. So in general, I'd say it's, more or less it's high right now.
We're just looking at a scorecard of the two stocks there, Lowe's and Home Depot, over the past 5 years, with Lowe's outperforming Home Depot. What do you see for Lowe's stock going forward?
Yeah, the outperformance certainly has been interesting because the vast majority of it has been driven by better earnings growth, much more so than valuation expansion. The management team at Lowe's has done a really nice job over the course of the pandemic, really improving the fundamentals and blocking and tackling both on the pro as well as DIY side. And as we look ahead, we think that Lowe's still has a lot of initiatives over the coming years to continue to improve both top line as well as productivity. That being said, we are more constructive on Home Depot. We like the company's even 50-50 split between the professional contractors as well as DIY. And Home Depot has invested billions of dollars into initiatives to really go after those large and the most productive pros. So we think that over the medium term, that their performance will accelerate as they pick up more and more share in a new market that they've more recently been expanding into.
And in terms of any, specific headwinds for Lowe's that, you'd be watching out for in the months to come, anything in particular that should be on investors' radars?
We're really paying a lot of attention to the employment framework because we think that as long as employment stays solid, people will continue to invest. So although DIY has been relatively soft, it has held in somewhat better than we expected that it would. So therefore, it's really the DIY part that we're most focused on and see the potential most weakness heading to the back end of the year.